We blasted off, no question about it. We shot up higher again, but there's still some things that are worrying me. Hey, Courtney Smith here with our TradeSmith weekly video newsletter. Checking out this thing. It's a lot of stuff happening. This, of course, is the most exciting thing all week. So memorize it, enjoy it. I don't read it, but I have gone to the Broadway play about this disclaimer. Okay, let's take a look right here. The market took off again. Now, I was a bit nervous last week. I thought we'd get a little bit of a dip. We did not. The market took off. I'm showing you a couple things on this chart. Obviously, the S&P breaking to new all-time highs. Also, very, very bullish. Look at the purple predictor skyrocketing up. It's stronger than the S&P. That's very bullish. All the way down at the bottom, I've got an indicator there called ADX, and you can see it just turned up a little bit. What that means is that it's saying the bull market is back in force. That we had gone, as ADX goes down, that tells us that we're in a sideways market. But now that ADX is going up, that says that the trend is back. ADX is a strength of trend indicator. These things are all bullish, particularly the purple predictor. And of course, making all-time highs is a very bullish situation. I like markets making new all-time highs. Now let's take a look at the Dow Jones. Our DI plus, DI minus indicator there up at the top, bullish. It's clearly not going to turn bearish anytime soon. But then look at the momentum divergence. I kind of talked about this a little bit last week, but the Dow has gone to new highs, and yes, the RSI has gone to new highs, but days later. And that suggests that this is going to continue to be where the weakness is, that we don't want to be in Dow 30 type stocks. And if we don't want to be in Dow 30 type stocks, then where do we want to be? NASDAQ stocks. Look at that chart, just taken off. There's no weakness there at all. The purple predictor is skyrocketing. It's stronger than the price action. This is a good looking chart, very bullish. Seasonality, oh my God, look at that. It's right under the top green line. And what I said last week is if we break that top green line, I think we need to start to increase our position even more. Generally speaking, when we're in a bullish seasonality, which we are, I'll take a 50 or 100% bigger position than normal. Now we're about to break out that green line. If we break above that green line, I'm going to go to 2%. I'm going to go to a double-sized position, definitely, and maybe even a little bit more, because that is really strong seasonality. Seasonality here, we've talked about it. We're supposed to be weak right now here in February. We're supposed to be making a dip. And so one of the extra bullish things in this market is when you have negative news, and in this case, negative seasonality, if the market makes a new high and the news is bad, that's extra bullish. Markets are supposed to go down on bearish news, and if they go up instead, that's extra bullish. Yield curve. Also, we're now to a point where there's no longer any downside pressure on the stock market, and it was never really downside pressure, but it was like keeping a cap on prices. Now you see the seasonality, the yield curve is actually going to widen now until May, and that's going to take the pressure off the stock market and allow it to have a normal, in fact, a better than normal seasonal move to the upside. So you got to be long and strong right now. Asset allocations breaking to new highs, money's flowing out of bonds and into the stock market. Stock market risk indicator moving down. That's actually not bullish. I would prefer this to be going up, but it's not the strongest of all indicators. We got all those other things are much stronger and more important. Global shares breaking out to the upside. You should be thinking about getting long global shares. The one I like the best right now is not the Greek stock market, and in fact, I got to get out. I got to just take my lumps. We're going to make a profit in the trade from where I told you to get in, but this is not a bull market, so I got to get out. Now, where I want to be is over here in the Japanese stock market. You can see that Thursday and Friday were strong up days, and I think we're starting a new leg where we're going to break out of all that consolidation and start to step sharply to the upside. Bonds, they're actually holding up quite well. I mean, they're actually drifting higher, which is more bullish than I thought they would be. However, look at the purple predictor. It's starting to weaken. So there's an indication that we're going to start to see this thing crack down. And I showed you the asset allocation, which showed money flowing out of the bond market. So that's why I'm kind of surprised that it's holding up. So here's how I'm trading this. If it breaks 118 to the downside, I'm getting short bonds. Otherwise, drifting higher, I can't get excited about putting money here on the bull side. Break 118 to the downside, and I am short. Bond key factors all still saying we should have higher interest rates, and that's just another reason why I'm looking for a breakdown soon. Now, soon, let's say in the next 2 weeks. Dollar broke out. I told you I was buying it. I bought it. The market's moving higher. Look at that. 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row it's gone up. Obviously, we should see some correction in here very soon. But nonetheless, you get 9 days in a row going in one direction. You now know that that's the trend. You do not get 9 straight days in one direction and that be a counter trend move. This is a trend indicator for sure that we're back to the bull market on the dollar. Gold. If the dollar's strong, gold's supposed to be weak, but it's not. It's actually holding up very well, which is pretty cool. I'm not long gold. I got long silver. I think that silver and gold are going to outperform gold to the upside because global economy is going to get stronger, and that's going to require more of the industrial metals like gold, or I'm sorry, not gold, like silver or copper. So I'm getting really bulled up on both of those. Last week for our fully paid up members, I bought a call on SLV, and that's worked out very, very nicely so far. So look to the more industrial precious metals to outperform gold. So no position in gold right now. I'm in silver, and I'm getting in copper this week. Gold, our gold indicators shifted more to neutral. They had been slightly bullish, all three of them, for quite some time. But it's weakened a little bit, and our top 2 indicators you can see are pretty much sideways. So once again, don't really feel all that excited about gold. Look at silver and copper. All right, oil in a big trading range. Listen, I'm repeating myself. I hate repeating myself. Fundamentally, I'm still not excited about this market, but technically, if it breaks to the upside, listen, the price is the final arbiter, not my genius. So if the price goes up, I'm going to follow it to the upside. If it breaks down out of this trading range, I'm going to sell it. I'd prefer to be on the short side, but it's not my decision. It's the market's decision. Hey, freebies, love having you around. Consider subscribing. It would be a super cool thing to see you on our fully paid up members section, which of course has individual trades, which we are doing extremely well right now. So anyway, but freebies, love having you here. Fully paid up members, hang on just a second and we'll get into our individual trades and our deeper analysis.